Talks, sponsored by Lexus of Las Vegas and Lexus of Henderson.
Well, with tax season over, there's no time like the present to take steps to ease your tax burden for 2020 and beyond. I asked financial professional Brad Zucker from Safe Money Advisors to share tax planning tips. Brad, the tax deadline already passed, but why is it still important to have taxes in mind?
Well, it's too late to do anything for a 2019 filing, but there are moves that you could make today to reduce future income taxes. And research shows that people that are actively engaged in their tax planning significantly boost their income in retirement. So tax planning is not something that you do once and forget about. It's an ongoing process, part of comprehensive planning that includes reducing your risk and increasing spendable income.
Yeah, we'd love to know what are those tax planning tips that you're talking about. You mentioned money moves, so what's the first one?
Well, the first is to adjust your withholding because the new tax laws have created new IRS withholding tables. So if you owe the IRS money, now is a good time to review and update your W-4. That's the form that determines how much of your paycheck will be withheld for income taxes. And the IRS has a calculator to determine the correct withholding. You could use it right on my website at askbradzucker.com. And when you maximize your retirement contributions to your IRAs and your 401ks, you are reducing your taxable income for the year. And while the money remains inside the account, it will continue to grow tax deferred until you withdraw it in retirement.
Do you have any advice now? You mentioned retirement, but what about savings or maybe even donating to charity?
Well, you want to diversify savings. A Roth IRA will give you tax diversification. Your money is taxed up front, but when you withdraw it in retirement, it's income tax free. And in our current low tax environment, it might make sense to convert some of an IRA or 401k to a tax-free Roth. And the new tax law has nearly doubled standard deductions, meaning fewer people are making contributions to charities. But if you plan to give to a charity, consider using the bunching method, meaning make a contribution every other year. It may or may not work for you, so you need to sit with your advisor to see what's in your best interest.
Now, you mentioned also earlier retirees. They are facing a very unique situation right now. So what should people in that category remember?
Well, if you are 72 years old or older, the current tax law says you do not have to withdraw money from an IRA or 401k. Required distributions are suspended for 2020, meaning you can forego the withdrawal, leave the money in the account without a penalty, and allow it to grow without taxes, lowering your tax bill for 2020.
All right, Brad, thank you again so much for all of those tips. We'll have all of this too at ktnv.com/money. We'll be right back.